Okay, here we go, everyone. Back, episode 5, back with the one and only Jamie Bell. How are you, my guy? What's going on here?
What is up, Emmett? Thank you for having me back, my man. It is a pleasure to be back, and as always, always excited to talk to you.
Oh, always a pleasure. Let's jump right into the few questions we had today, or
Yeah,
from last
yeah.
episode. We had some questions from Twitter and the outside world here. We've got a few questions about diversification in the stock market versus other assets such as real estate, business, and how often people should be kind of buying and selling.
Yeah. So let's take a step back here, right? And I see this first question, and I think this is where this is kind of goes. So trying to invest in real estate slash start their own business. This is what I'll say about starting your own business. If you have an idea and you want to put that idea to work, I always tell people invest all of your money in yourself. If you're starting a business and you really want to get this thing going and you foresee that it could be profitable in the future, forget about the stock market, forget about anything else. Like if I'm just being completely honest, so that's where I'll start there. Um, the reason why I invest in equities is because I don't have a business idea for myself right now. I work on a desk, for a company. So I always encourage people, man, if you have a dream, if you have an idea, and if you are an entrepreneur, you should be using your funds to essentially invest in yourself, because that's how that's going to be the best return that you'll make. I mean, imagine telling Mark Zuckerberg when he was 20 years old, "Hey, man, instead of investing in yourself, you should go be buying and selling stocks." I mean, come on, right? Um,
Yeah.
so, look, I'm not going to be the guy that tells somebody, "Hey, I have this great business idea. I want to start a small business, but hey, should I also be investing?" I mean, no, man, you go for it. Forget, everything else. When you want to start saving for retirement later, then you can worry about the stock market. But if you got an idea and you're starting a business, man, I mean, go all in. So that's where I'll start with that. Now, let's say if you're kind of the majority of people, and you're not an entrepreneur, right? Because at the end of the day, there's only so many people that have good ideas, right? And or people that are willing to take a leap of faith.
So
Um,
it's a hard life to live too, man. People kind of,
exactly.
it's been romanticized a lot lately, but it's a hard life to live, to
Oh,
struggle.
absolutely. Um, I think America needs more entrepreneurs. Personally, I think it's fantastic that people want to actually start something for themselves. Um, it's so healthy just for the economy, right? Just to have college graduates being funneled into Fortune 500 companies, which is kind of where we're going. I mean, it kind of creates like a banana republic, and I'm speaking for myself. Here I am, kind of a recent college grad, just taking the stable salary, sitting at a desk here. And I mean, I want more for myself personally. If I had a business idea today, man, I mean, shoot, I would like to take a shot, but just there's nothing really on my mind. And I do like the stability, but I admire individuals that can take a leap of faith and kind of bet on themselves, because it's fucking hard, man. I mean, with how expensive it is, to start your own business right now. But look, if you're starting your own business, if you own your own business right now, forget about stocks, man. Invest in yourself. Now, if you have excess savings and excess profits, reinvest back in your business. Again, forget about the stock market, man. You save the stock market for when you're trying to save for retirement later on. But if you're early and you're young and you're starting something, man, just focus on that, because that's
So
how you're going to make the most money.
yeah, so what about the kind of, like, I would say the majority of people, like, you think they shouldn't dabble in different, I mean, I don't know if there's really a platform that allows people to invest in really small business. It's hard to kind of angel invest when you're
Oh
that
my
young,
god.
but
And this is the big issue that I see, just in our investing landscape, that an 18-year-old can go on Robinhood and get approved for options trading with $2,000, and Robinhood will approve you in like 5 minutes. But if I wanted to, right? So an 18-year-old could go put on some iron condor option spreads, some bullshit like that. But God forbid, Emmett, if there's a local brewery buy my house that I wanted to invest in, I have to be a qualified investor. I have to meet requirements. So I have to have like,
Yep.
$1 million net worth. And then I have to go through 80 pages of legal documents just to be able to make an investment in a local brewer. Well, let's say there's a family owned restaurant by me that's, in hard times, and shoot, maybe I just want to help them out, maybe make an equity investment to help out my community to make sure that people are actually still employed where I live. I mean, again, 80 pages of legal documents, but if I wanted to go buy call options on Tesla, which Tesla doesn't need any more capital, but I can go do that just fine if I'm 18 years old. So that's kind of the heresy with the investing landscape. I think it's complete nonsense. Personally, I
It's a
think
weird
that
environment too.
oh, it's
Like
horrible. The
trying to
companies
become an accredited investor is like you have to go through
exactly
7 hours of the to get your Series 7 as a normal person, and then you have to spend X amount of dollars to take that test, and then or you have to have 250 grand in the bank. Like,
exactly. I mean, it's so ass backwards, our investing landscape. And look, a lot of people a lot of people say, yo, what would you do if you were president? Man, if I held any sort of position in the government, or if I was president, I would do everything that I possibly could do in my power to incentivize capital flowing into smaller family owned businesses, because
yeah.
the companies that are getting the capital are the ones that don't need it. Look, I mean, you have Evercore, Moelis, Morgan Stanley, all these investment banks that are already flowing capital into the big boys. I mean, what about the small family-owned businesses that banks don't even want to lend to? So it's just the investing landscape is completely ass backwards. And that's kind of what I'll say about that. It's just I think there needs to be more done for small family-owned businesses, for recent college graduates that actually want to start something, from the ground up. There's not there's not a lot of help out there. It's just we live in this society where everyone's just funneled into working desk jobs for multi-billion-dollar corporations, and it really is sickening, because 20, 30 years ago you never would have imagined that this would kind of be where we are in America, that entrepreneurship is so de-incentivized because of the cost of actually starting a business, first of all, and that there's like literally no ways to get capital. You know what I mean? And even then, like,
It's
people say, oh, you could get an angel investor, you could get a VC, but man, you need connections for that shit. Like, you know what I mean? If you didn't go to an Ivy League, I mean, geez, just to be able to get in front of people, and if you don't talk a certain way, some of these VCs don't like you, man. It's a joke, man. It's a complete joke. And I'm very passionate about small business personally. And I just think not enough is being done for communities just around America, everywhere. They've been left astray, and
and like you
we can.
said with the angel investors, it's when you have private equity firms like Andreessen Horowitz just straight up coming out saying like they're not funding anything that's not Silicon Valley made. That's when there's no chance for really anyone starting a small business to get any type of funding.
Oh, and there is nothing that the government does whatsoever. I mean, look at what have we learned with the tax bill that's coming in 2022 that just got announced. It's not as bad as kind of what I outlined in last podcast, but okay, so they're going to raise the corporate tax rate from 21 to 28%. Well, hello, there's some small businesses that are registered as S corps, and that's
There's
going to raise their
a lot of
taxes.
them.
Yes, like I mean, there's a lot of family-owned small restaurants that are registered as S corps. So after the year that small family-owned restaurants had, you're going to raise their taxes, and on top of that, you're going to do a $15 federal minimum wage. Are you joking me? Like, are you actually kidding me? Now, for the minimum wage thing, Emmett, this is what I'll say. There should be a clause or an asterisk, because I believe Walmart and Target should be paying $15 minimum wage. They make more than enough money to do so, right? But to force a
It's
college town restaurant to pay, a part-time college student waiting tables $15 an hour, I mean, let's be honest, that college town, I mean, how are they going to survive doing that? You know what I mean?
those are like the people, those are the backbones of the community that they're driving out. That's what makes college towns. And
Exactly.
when you
So
raise the rates on them and force them to pay that absurd amount of money to they're gonna have to close doors, and the whole environment of that community changes.
Yeah, so you're going to raise their taxes by 7% and then force them to pay, part-time cashiers, part-time waiters, part-time busboys, um, $15 an hour. I mean, it could be a death knell, right, for some of these small business. But however, I do believe in a $15 federal minimum wage for some of these big box retailers like Target, Walmart. So that's where, and the government could do that. Look, Target and Walmart are going to be around for a very long time.
Oh
Let's
yeah.
be honest, right? So they could easily add a clause in saying, hey, big box retailers, publicly traded retailers must pay a $15 minimum wage.
I mean, as long as it doesn't trickle down and hurt the prices around the entire store, as long as they're not footing the bill on the consumer, that's no
Yeah.
issue with
And
me as
here's the
well.
thing with that. Costco pays like the lowest paid employees, like $17 an hour nationwide. So Walmart can do it. And I think they actually are getting kind of forced to. But that's kind of where I stand there. You can't force. I mean, it was already hard enough in 2020 for these small businesses. I mean, holy smokes. But well, that's where we'll kind of end it there. I think we made some good points. It's just like, dude, I mean, I would much rather see the government generate tax revenue from, oh, wait, what did we talk about 2 weeks ago? Cannabis. So rather than taxing small business owners and raising, and doing all these things, how about you just legalize cannabis nationwide? Oh, God, there you go.
That's
There's your
exactly
tax revenue. I mean, holy smokes. Didn't these small restaurants already have a hard enough 2020, and now we're just gonna make it fucking even harder? I mean, oh
Oh
my
yeah, well,
God.
the government's been sitting on their hands with cannabis for years now, and it's about time for them to figure it out and find ways to, like you said, to tax. And then, like you said, it would raise jobs, gets people out to work again.
Exactly. I mean,
It's
there are job opportunities in the cannabis industry that maybe I don't even know of right now, man.
yeah, you
I
never
mean,
know. I mean, we glanced over warehouses, things like that, but there's just tons of places that will just add to the workforce.
yeah,
Maybe research and development.
it's it's not
It's
just
endless.
storefront. Yeah, it's not just storefront. It's not just people kind of serving customers in dispensaries. It's the background, it's the logistics, it's the research, it's the growing. Um, you name it. But then again, we're just gonna raise corporate taxes, which maybe makes sense for public companies, but there's some small, medium-sized corporations that are private family owned. I mean, maybe they employ 30, 40 people. I mean, are you kidding me? We're gonna raise taxes on them too. I hope they put a clause in, because it's just a joke, right? To be raising taxes on people after how hard of a business environment it was in 2020. And that's where I'll
It
end on
doesn't.
that.
Yeah, like you said, it doesn't make sense for there not to be a clause in there with the amount of people that are registered as S corps that are tiny family businesses.
Yeah, it's a joke. But
All right, next we'll hop into
diversification. This is a big one. So
yeah.
I touched, this one right here, Emmett. This is the biggest question that I get from friends, from family, from people. Okay, we hear about how you invest in all these kinds of stocks, and some people get confused because I'm in a bit of I love the cannabis industry. I love the gaming industry. I love some consumer-based names like MGM and Vegas and Callaway Golf, and people are kind of like, man, you're kind of all over the place a little bit. I'm not really, right? It's not crazy, but this is what I tell people: you got to own 10. You got to own at least 10 stocks. That's a good foundation. Because I mean, dude, you look at the best investors, right? They own 30 to 40 names. I mean, some guys like Peter Lynch, who is regarded as one of the best investors ever, would always own at least 100 at any one time. You know what I mean? Um, I I don't believe in just taking like huge concentrated bets, you know.
So do you diversify across? Would you recommend diversifying across industries, or would you diversify within an industry? That's another question that I've received as well.
Man, I like doing both. So I own a lot of names personally. I tell people the amount of names that I own, and they're like, Jesus, man, how do you do that? I own 50 plus names at any one time. And the way that I do it is exactly how you say. I diversify within an industry. So I own 5 to 6 cannabis names, right? And I track it like a basket. You know what I mean? And it's not crazy. because there's so many different cannabis companies you can invest in, but I've pinpointed 5 to 6 that I really like, right? So that's my basket. And then I like the gaming industry, so maybe I'll choose 3 names there, but I'll overweight the ideas that I like the most. It's a portfolio strategy where if you take small positions, even in some companies you kind of like, your portfolio will concentrate itself, right? From performance.
Yeah. So is
Your
there?
best
So,
your best winners will actually start to turn into some of your largest positions. I can give you a real life example um right now, or did you have a point you wanted to make?
no, go ahead. Go ahead.
2 years ago, I talked when we met in person, a month ago. I talked 2 years ago. I took a small bet on this company, up and coming online retailer called Chewy.com. 2 years ago, right? The company IPO'd. I sat down and I thought about it. I'm a big believer in the humanization of pets, right? Even before COVID, I was involved in Chewy before COVID,
Yeah.
at about $25 a share, and it was a smaller position. Now what? The stock's at about 80 today, so about tripled my money. That position has turned into like a substantial. It's not my largest, but it's turned into a substantial position for me just because of performance, right? I haven't been a buyer up here, but I haven't sold it because I still like the company a lot. You know what I mean? I think it's overvalued, but man, a lot of things are overvalued, and I still love Chewy. You know what I mean? I think it's a good company. I don't think they're going to have as good of a 2021 as they had in 2020 because we were all stuck at home in 2020 and a lot of people got pets. You know, that
Yeah.
probably starts to tailor off a little bit, but I still like the company. But that's an example how a small position, maybe was I all there with Chewy 2 years ago? I thought it was kind of overvalued 2 years ago at $25 a share, Emmett, but I liked the business and I liked it enough and I liked the management and I loved the way that they do business. And I think the stories I heard of how Chewy would send handwritten notes to people that had their pets pass away. So like with Chewy, you get set up on like a monthly
Yeah. It's a
recurring.
subscription based model
Exactly. And then if
for the
it's a
pet
subscription
products.
based model, and then, if you cancel the subscription, they ask, hey, why'd you do it? And if you put down, my pet passed away, they actually would send you a package and it would be a handwritten note. I mean, oh my God, talk about the right way to do business. I mean,
Exactly.
that literally touched me. I'm like, dude, these guys are really getting out there to make sure that, people are being loyal. And I loved it, man. So that's just kind of an example of how you could take a rather smaller position. And, now Chewy is very well known, but 2 years ago, people were like, what the hell is Chewy? You know what I
Yeah.
mean? And how you could take a small position in something that's kind of lesser known, and performance itself will dictate how concentrated you are. So I am fully committed to owning Chewy for the long term. Am I a buyer up here at 80? Probably not, but I'm going to own this.
That's yeah.
And it
That's kind
caught,
of where I
and
wanted to ask of. So if you were kind of bear on. Oh, sorry about that. I got a
no, it's,
quad car rolling through here.
we live in SoCal. It is what it is. Ambulance, fire trucks everywhere.
Yeah. So if you were so bare on them back in the day, like you thought they were overvalued, what caused you to stick with them and stick
It
around
wasn't
to
gross.
$80?
It wasn't grossly overvalued, at 25 a share, because that put the valuation. I mean, I'm just throwing out numbers. So it's at 81 today, $35 billion valuation. So let's say it was like at 9 or 10 billion. That was not over. It wasn't crazy. The balance sheet, the financials weren't great, but it was literally the only pure play on the humanization of pets that I saw, and that's a big trend that I love. I mean,
Okay.
yeah, it was more I loved the business that they were in, and I could get over the fact that the financials weren't that great. Um, and it ended up being a big beneficiary from COVID, right? If COVID never happened, this stock would be a lot lower. But they're a big beneficiary from COVID because they don't. Chewy doesn't have any it doesn't have any brick and mortar retail stores, right? They're solely online. Um, and I'm willing to hold this thing. You know what I mean? And now this is where you want to. This is the best way to diversify yourself. So there's Chewy that has maybe shaky financials, kind of overvalued, and then there's a stock like American Express, right? I've owned American Express since 2016. Boy, talk about quality, right? This is a fantastic company that's been around since the late 1800s.
Yeah, it's
You know what I
it's not
mean?
going anywhere. The
This
Chewy
is
one's a little more of a newer kind of business
exactly.
play. But then you have your
So
rocks that in there that are
exactly, who are your guys, right? Who's the guy you can get the ball to in the fourth
yeah,
quarter, so to speak? Who are your three,
yeah,
four, five hitters you could run out there every day in your lineup, right? There's a stock like American Express, right? Larger, been around, and that's a large position I continue to hold. And there's other companies like the United Parcel Service, right? UPS. I mean, another fantastic American business with very sound fundamentals, really good financials. So this is how you could kind of even out your boat, right? I own stocks like Chewy, which are high flyers, you know what I mean,
yeah.
online
The
based.
flashy ones or the sexy
Exactly.
ones.
Shaky financials. Chewy's financials aren't great. And then I could pair that by owning American fucking Express, right?
Yeah,
And the United Parcel Service, which are very high quality companies. So that's kind of where I sit. You want to even yourself out. You want to participate in kind of different market personalities, right? The market's like a baby, right? It's very emotional. They could throw tantrums, it could whine, it's hot and cold. The market likes these stocks one week and those stocks the other week. And rather than trading in and out, man, you could make money being an owner of quality like American Express, UPS, and you could also own, companies like Chewy, right? There's nothing wrong with owning because the best investors do both, man. Because you look at someone like Warren Buffett, right? People are like, oh, Warren Buffett only owns boomer stocks. Berkshire Hathaway owns Snowflake. You know what I mean? Like a recent IPO, right? They took a position in Snowflake. Berkshire Hathaway has a position in Amazon. You know what I mean? So their larger positions are companies like Wells Fargo, American Express, yada yada yada. But dude, they take shots too. Like, you know what I mean? Some of these guys take shots at
yeah.
some
Like when you
at
when you
some
get your
high
portfolio
flyers.
to that, I guess I would say that strength, you have the ability to take the
Takes
shots that they can.
exactly. You can take some shots, and the positions can be smaller in nature. You know what I mean? Like did I wish I put on a larger position in Chewy when I was buying it in the 20s? Of course, but at least I put on a position. At
Yeah,
least it was
exactly.
small. You know what I mean? God, I wish oh, I could go back and be like, God, I wish I was buying it hand over fist. It was the only stock that I owned. But at the end of the day, you can't do that. You know what I mean? You can't do those things. So
Yeah,
when it
you get to
comes to
kind of have to pick the wins that you get and be happy with them.
exactly.
Better than a red day,
So
you know.
I tell people own at least 10. And let's say you own 4 stocks today. You don't have to go buy 6 more tomorrow. But I would say work to it, man. You know what I mean? It's a work in progress. Like I had a friend that only owns like 4 stocks. And I told him, you got to go own at least 10. And he said, okay, what are 6 stocks I could buy tomorrow? I say, dude, okay, let's slow down here.
Yeah.
Let's not take my advice as like I I said,
Not literally
make
here, but
yeah,
I mean,
exactly. Make it
let's
I
make
told
a
him,
plan.
make it a goal by the end of this year to find and generate 6 new ideas and take positions in them by the end of this year. So again, it doesn't have to be tomorrow, it doesn't have to be next month, but maybe over the next month you could generate 2 new ideas and get some positions in there. And maybe over the next 2 months, you could generate 2 more. But I want people to start getting a little bit more exposed to different industries because man, when you get just too caught up in one industry or a couple stocks, it's you lose some sleep, man. And what the hell's the point of that? And
Yeah, exactly.
you have to be able to properly manage risk because if you look at the big boys and the big funds, man, they own. I mean, dude, the investment arms own like over 1,000 different stocks because they're market makers. You know what I mean? So they have to make a market in various securities, but that's how they like to be. You know what I mean? My expectations, Emmett, I need to just make 6 to 8% a year, not 68% a year, 6 to 8, right? Six
Yeah.
dash eight. That's all I need to be. Now, obviously, over the last couple of years, it's been a little bit better than that. But moving forward, that's where I need to be. If I can compound my money at 6 to 8% a year, I'm gonna be just fine. You know what I mean? And I tell people that, and they're just like, "Oh my god, like, are you kidding me?" I'm just like, dude, like that's
It's just
I'll be just fine there. What I can't afford, Emmett, is a year where I lose 19%. I can't have that. You know what I
Yeah,
mean?
exactly.
I can't. I'll give up some upside to protect myself on the downside a little bit. And obviously you can't really control that. You know, if the S&P 500 falls 25% a year, I mean, it's going to be hard to be positive on the
It's
year unless you're
I
just
was gonna say
absolutely
it's
shorting
tough to
it.
find
You
winners.
know, yeah, you know what I mean? So in the market, if you have a year like 2018 where the market just completely fell apart, I mean, nobody made money unless you were short the market. But you know what I mean? Um,
Just
I
very
think
few people.
exactly. So let's say you own 10 names. I would say, hey, you know what I mean? Put on 4% position in every name. So that's 40% of your portfolio, right? Leave the 60 in cash and then just be a buyer, right? Be a buyer of those names and continue to do your homework. You know what I mean? Pay attention to the earnings, the quarterly earnings. Um, I sit in on live earnings calls for some of the companies that I own, some of my larger positions. Like I treat it like I'm an actual investor because I actually am. You know what I mean? Because
Yeah.
I'm an investor in the business, and if I plan on owning American Express, Emmett, for the next 25 to 30 years, and I have a what I consider to be a solid amount of you know, my portfolio, my net worth in the company, yeah, I'm going to tune into their earnings calls 4 times a year usually. And I'm going to tune into their investor presentations because I'm very curious to what's going on there. You know what I mean? And not to mention, I'm a freaking investor, so I better know what's going on. You know what
That's
I
a
mean?
huge
But
thing because people don't even realize that that's even allowed. People don't even know that that's a thing.
oh, dude, you could
People who
too.
come to
Oh,
me
for
and they say, "How?
free.
What are you talking about?" I get notifications about when the calls are coming on or when things are going on. They hit my inbox. It's
Exactly. Same for me too. And so it's as easy as going to American Express Investor Relations. So every public company has to have an investor relations um, link on their main website, and you can just put on your calendar, hey, I have my calendar, you know, American Express reports earnings on yada yada date, and then this is what time the earnings call is, and I'll literally go tune in. And when it says what company I work for, I just put NA. You know what I mean?
yeah.
And you can just tune in there and it'll call live, or you could just listen to the replay. I don't know. That's people don't have to. You don't have to go do that. But that's just kind of an example of how I like to stay up to date. And people ask me, dude, how do you stay up to date? Well, it's doing shit like that. You know what I mean?
Listening to what
Um,
the companies are saying, that puts you in a better
exactly.
position.
Exactly. Look at the power. And if you, dude, I love PowerPoint slides. Like I'm a big PowerPoint. So if every company has to put out a deck, and you can just look. It takes like what 10 minutes. Look through that. Just fucking look through it real quick. You know what I mean?
Exactly. It's
Um,
just free material.
look, when it comes to putting together a portfolio, man, there is no best way to do it. There's some guys that'll own 500 stocks. There's some guys like Bill Ackman that only own 10 or 11. You know what I mean? And then, but the misconception is like you with Warren Buffett. You know, I think Warren Buffett and Mark Cuban have said like, oh, diversification is for idiots. Well, it's like, dude, Warren Buffett owns like 60 different stocks. So like for him, 60 stocks is being concentrated.
Yeah.
Because look, in the S&P 500, there are 500 companies, right? So that's maybe too diversified in my opinion. But you could buy the S&P 500, it's fine. But you know what I mean? But like relatively speaking, if you own 50 different stocks, it's that's still pretty concentrated. It
Yeah,
really
like you
is.
said,
And
it's compared to
relatively
500,
speaking.
it's very concentrated.
Exactly. So, and then like a guy like Mark Cuban says, you know, diversification. That guy owns like 30, like Mark Cuban owns like 30 different stocks. So you don't try to like read into like what some of these guys are saying too much. You know what I mean? Because for Mark Cuban, a guy that's worth multi-billions of dollars, owning 30 stocks is pretty concentrated. You know what I mean? It's pretty damn concentrated. So he has big positions, right? But it's, you know,
Yeah.
20, 30 companies. But then like if like a retail investor owns 30 different companies, it's like, oh God, I'm too diversified. That's like, not actually, not really. Like, you know what I mean? Like, not really at
Yeah.
all. Like, don't like it may be hard to follow everything, but I mean, also don't feel the need that you have to follow everything all the time. Like, you know, if I own 4 to 5 different cannabis companies, then maybe I could closely follow 2 of them that are my larger positions, and I can just follow the cannabis industry as a whole. You know what I mean?
Yeah, that's kind of the biggest thing is people get caught up in how they can follow all these stocks and just like you said, follow the entire industry and then the ones that you have the biggest concentration of your capital in.
Exactly. You can't, you know, realistically, you can't be a full-time, investment bank sell sider with your portfolio, because a lot of people have actually real things to do with their life. You know what I mean? You have jobs, you have family. So don't get too obsessive over these things either, man. That's like always my number one word of advice for people. It's like never get too obsessive over investing, which a lot of people have been doing over in 2020 and recently. You know what I mean?
Yeah,
You have
that's a
people
good
just
kind of a good segue into this next question they got from a buddy of mine. Like he's one that's super new to investing and he's super into the whole options trading thing, but he only puts his plays in like one. For example, the past weekend when I was with him, he was like, "Oh, I have this Google play. Like it has to work out by like Tuesday. Like I have a call on it. It's got to like have to hit that." And there's people get sucked into that stuff. But then do you think that there should be people that are allocating most of their capital towards like pot slash meme stocks, or do you think they should focus on more of like the long term and
yeah.
get away from the option stuff?
So with this question, I'll break it into two parts. So first thing right off the bat, with your buddy that's buying Google call options, I would ask him, why don't you just buy the stock? And I would just sit there and I'd look at him. Like, why don't you just buy the stock? You're how old? I'm assuming your friend is under the age of 40, right?
Yeah, yeah,
And I would tell him, hey, Google owns YouTube. Okay. So what's the idea here with buying call options? Like, is the market going to fairly value YouTube over the next by Tuesday? You know what I mean?
it's just
So that's kind of where I that's and I would and I would let him talk. So I don't know what his thought process is on that. Um, so this is where I'll go with this question. First of all, like the cannabis industry or pot stocks, and he doesn't mean to do this, but I know where this question kind of is going. But the cannabis industry is not a meme, in my opinion, at least here in America, right? A company like Trulieve owns and operates over 70 profitable dispensaries in the state of Florida. That's far from a meme, in my opinion. But I get what he's saying here. It's like, do you want to kind of go all in on smaller, early stage industries, or do you
yeah, that's
kind of want to even yourself out, um, and actually own some quality names? We went over that kind of earlier, but absolutely, you want to own both, right? So yeah, I own some early stage opportunities like cannabis and gaming, but then I also own some stocks like American Express and UPS. You know what I mean? Because you need to have both. You can't you can't just be all in on early stage, early growth opportunities. Because what have we seen over the last 2 weeks? Some of these companies have been absolutely freaking hammered.
yeah,
You know what I mean? Like
getting killed.
cannabis stocks were down huge, and now they've kind of bounced back. They're kind of down huge today, but there was a lot of volatility there because this is an early stage industry. So I mean, do you really want to have to put up with 4 to 5% swings every single day? I'm fine with doing it because I've been doing this for a while. But for someone that's new, man, it's really hard. It can be really emotional. You
I
know
think
what I
that was
mean?
the
So
bigger part of the question, like of the more deep underlying question of like, do you think that these people who are newer to investing should be getting into such emotional roller coaster stocks like those new early onset companies?
no, because then you can make mistakes and sell too early. I mean, dude, I don't think it's you got to even out your boat, man. And there's not one thing that I can say. I mean, I could put together a spreadsheet and send it to you, and like this is the perfect portfolio allocations. Like do what makes sense. You know what I mean? People people are really smart. Like people I talk to that don't even work in finance, I'm like, dude, you're pretty fucking smart. Like you know what I mean? Then like
Yeah,
you kind of have a feel because you'd be surprised, man, with some of these institutions, they do the same shit. It's just like, oh, what are we feeling? Like, I'm not even joking. Like, you know what I mean? Like some of the best investors are just like, oh, like fuck it. Like, you know what I mean? Like, it's sometimes it's a lot simpler than what we kind of make it out to be. So let's call it like this. I know a good guy I follow where it's if his equity book, so to speak, is like 60% what he believes to be market leaders, dividend payers, kind of established businesses, right? Your American Expresses, your Visas, your MasterCards.
yeah,
And then 40% are kind of early stage, smaller companies, you know what I mean? So 60% kind of established market leaders, 40% maybe early stage, industries, I think that's a good place to start. Or maybe if you have a little bit more appetite for risk, you go 50-50, or maybe you go fucking 80% early stage, 20%. It's all up to you, right? That's the best thing about investing is you can kind of do what you want. I do not have a a specific recommendation to this other than do what like actually makes sense, because I trust that all of you listening out there can, kind of put some thoughts together and think about this. I think for me, it's like, I don't want cannabis to be over 10% of my portfolio, really. And
Yeah,
people
oh,
are like,
yeah.
damn, like you're really positive on cannabis. Like, really? Like, man, 10% is pretty much, because look, I want to own, the gaming industry too. Maybe that's 10%. And then I like, American Express and UPS. So maybe, you know what I mean? But like, be manage risk. You know what I mean? Like, just because I really like the cannabis industry doesn't mean I'm gonna go put 75% of my net worth in the industry, because dude, I might be wrong. Like, you know what I mean? You have to
That's
be humble enough to be like, dude, like, what if this fucking whole thing falls apart? You know what I mean?
that's a big thing I was gonna say is like just because you love an industry doesn't mean you have to put your entire net worth in
Yeah.
that industry.
Yeah. Like, what if the gaming and cannabis industry actually don't work out for me? Like, I'm humble enough to understand like there is like actually, there's possible situations to everything. You
Yeah.
know what I
And the
mean?
market
So
does what it wants to do.
yeah,
So
so I'm going to be involved. I'm going to be involved, and from my side, I think being involved at about, a 10 to 15% position is pretty fucking involved. You know what I mean?
yeah.
Um, but I think, like, relatively speaking, people are like, damn, like, you know what I mean? Like, you're super positive about it. Why don't you? It's like, dude, that's like enough for me. Like, dude, if this works out, like, I'm gonna be just fine. Like, like, at a 10% allocation, I'm gonna be just fine if this works out for me. Okay. And if it doesn't, it's gonna hurt, but it's not gonna hurt as much if I have, 50% of my portfolio in it. So
Exactly.
manage risk, right? It goes back. I can't afford to lose, 20, 30% in a year. I just can't, you know. Um, you also, how often should you be buying and selling stocks? This has to do with your personal schedule, because I'm assuming that everyone listening to this, is it, or maybe, you're a full-time day trader and you don't have a job right now, which is totally fine, right? The labor market's really tough. But let's just assume that, you have a 9 to 5 job, and, you have things, you have to hang out with your girlfriend and your family. I mean, can you really just spend, every hour just opening up your brokerage account and trading? I mean, I can't.
Yeah, exactly.
I don't want to. Like, so for my instance, I wake up, I check the market, I don't do anything. Dude, I take lunch around noon, right? Around there. And from like, let's call it like, the market closes at 1 p.m., right? So the market opens here, West Coasters, it opens at 6:30 a.m. Some people think it opens at 6 a.m. It actually opens at 6:30 a.m., the NYSE, and it closes at 1 p.m. So from like 12:40 to 1 p.m., that's where I actually really look, and I'm like, okay, like, is there anything I could pick up today? You know what I mean? Maybe I'll check in the morning if like the market's falling apart, and I'll be like, damn, like, is there anything I could buy today? You know what I mean? But for the most part, like,
There's something on
I'm not
sale
like
today I can grab.
exactly, but like, dude, like, if it's kind of like, just a steady Eddie type of day and there's really nothing, like, I mean, I'm not really worrying too much. I don't really, you know what I mean? I'm not really, I think more in weeks, you know what I mean? So I'll check like every Sunday, pretty much Sunday morning, where are we at, where we are in the week. And I'll make like a kind of like a mental goal, like, man, Callaway Golf, I want to start accumulating there. So maybe I'll just, try to buy a few shares every day. You know
Yeah,
what I mean?
exactly.
Because I don't know where the stock's going. It's a very special situation, right? Very special situation going on there. And there's a lot of things that the market needs to figure out about Callaway. So I don't know where the stock's going to be next week, next 2 weeks, but I have a good idea where it's going to be in the next 5 to 10 years. You know what I mean? So I just want to be in an accumulation phase, and I don't want to get too emotional about what's going on day to day there. Um,
Yeah, that's a huge one we talked about last episode too, is that it's just very bullish on the company in general. So it's kind of hard, like you said, like you want to build a position right away, but it's tough to see where it's going to go.
Exactly. I'm gonna be here. You know what I mean? So I think the biggest issue that I see with my friends too is like there is no consistency. I've had people that reach out to me and are like super interested about investing, and they'll be super interested for like 3 weeks. And then I won't hear from them for like 3 months. And they'll be like, oh, like, I sold everything because I just like didn't, it was just, 'cause it's just like, and you have to really like, is this like a game to you, or is this like building wealth. You know
Yeah.
what I mean? And that's where I think you want to kind of really look at yourself in the mirror and be like, look, and it's kind of like a personality thing. I'm a very consistent, steady Eddie type of person. And I know some people are more like wild, but dude, I like to get up and just kind of like just do the same shit every day. You know what I mean? So that's just my personality. That's why I just kind of chill. You know what I mean?
It's
I'm not
just like
really.
working out or exercising. It's something you have to
Yes.
do consistently, and then it kind of just comes naturally at a certain point.
Great analogy, and thank you for reminding me I need to work out more. But but it's that.
Don't we
But dude,
all?
it's like, dude, man, that's the biggest issue I see is just like, man, like I love investing this week, but then if I lose a little bit of money, it's like, man, like I just become disinterested. And then if the market, pulls back 5 to 10%, I'm not ready or nimble enough, or my head's not there to actually take advantage of it. I just
Yeah.
refuse to. Oh, here's another thing. This is my favorite. This is the best point. When the market is getting absolutely crushed, Emmett, let's say, so like over the last 2 weeks, there's been days where the Nasdaq's down like 2.5%. Like, you know what I mean? And there's people like, oh my God. People are telling me I'm not even logging into my brokerage account today because I don't want to see it. I don't want to see how much I'm down.
Oh yeah.
I'm the opposite. I do the opposite. So I do the opposite. When I'm down huge, 3%, I'm down a lot of money. I'm not gonna say, but that's when I want to log in and I go, okay. Well, and that's when I get excited. I'm like, okay, what are we doing here? I'm like, okay, because look, you have to accept the fact. Look, I'm down a lot of money right now on paper, but what can I do? What are some opportunities? And now when the market is ripping, right? When the Nasdaq's up 2%, Dow's up 800 points, right? Because we have something.
Yeah.
That's when people want to log into their brokerage because see, oh my God, I'm up $800 today. You know what I mean? But that's when I don't log in because I'm just like, there's nothing to buy today. Why do I'll seriously, like, if there's a few days where the market's going up, I won't even log in
No, and
because I
that's when
don't.
people who are newer, they get the sense
I
of, okay, like I'm doing well today. Like, what can I buy now? And it's like,
exactly.
pump the brakes.
I am the exact opposite. When the market is ripping and I know I have stocks that are ripping, I don't even log in. Why do I need to see it? I'll log in, but it's like I'm not gonna go chase it. You know what I mean?
Yeah,
But
that's
like
the
when the
biggest
market's
thing.
getting crushed, people are like they just refuse to log in or look. That's when when the market's getting crushed, that's when I'm logging in 4 or 5 times a day just to make sure. See if like, damn, because what if you bought this pullback that happened a week ago? You're looking pretty good right now. Things are looking okay,
Oh
right?
yeah.
If you bought but there's a lot of people that either I know friends that sold, they got scared. Again, what I say, don't get shaken out. You know what I mean?
Don't let the
I
big
had
boy shake you out. It's just,
I had buddies that kind of weren't nimble enough to put some money to work on the pullback because they're like, oh, I'm not going to log into my brokerage account because I don't want to see. It's just like, dude, accept reality. Like,
yeah,
I
that's
think, like, oh my God, so it's all like, oh my God, like the market and investing, it's all psychology at the end of the day. Everything's a mind game at the end of the day. And look, and if this is super tough, and which it is, right? Investing is not easy because the market will make sure that investing isn't easy. Man, I've had periods. I know most recently, like 2018. Oh my God, that was horrible for me.
it was a
And then
bloodbath
it was a bloodbath in
for
2018. And
everyone.
people don't remember 2018. That was one of the worst years. Um, oh my God, because that was just a prolonged, just horrible market. And then you
Yeah.
had, the COVID crash in February and March of 2020. Man, those were hard times for me, dude. I was an absolute bag holder. Like, you know how bad that felt? Being invested since 2016, Emmett, and seeing your stocks, all the work that you've done. My stocks were trading lower at one point in March of 2020 than when I bought them at like in 2017.
I think a
That was a
lot of younger
that
people like us who got in at the same time, like it was a really mentally tough day. Like,
that was
not to
hard, but
get
then
too into that part, but it was a tough day, like psychologically, to be like, wow, like I could have lost everything.
yeah. And luckily for me, just because of my habits, I did some buying, and obviously because I was lucky enough to still keep my job, so I still had income, so I was able to
Oh
take
yeah.
advantage of it, you know what I mean? But I'm lucky because I had friends that sold like in the middle of March, you know what I mean? And then they ended up getting back in eventually, and now they're fine. But you would have actually been better to just kind of hold and add, you know what I mean? Because it happened so quick. But man, that's just kind of, investing psychology is understand yourself and your habits and try to make it as consistent as possible. So for me personally, man, on a day-to-day basis, I'm looking to put cash to work, but it's all comes down to your situation. How busy are you with your work schedule? Because I can't expect people that actually like, because I work in finance, I'm in front of a computer. If you're out and about and like you're actually doing like a real job, you know what I mean, and like putting things together. I mean, you don't have fucking time to be looking at your
Oh yeah. Like I
bank
have I
shit.
have a bunch of buddies. They work in a few guys that are project managers for construction companies, so they can't sit in front of the computer all day,
Yeah,
and
and that's
like they're on
fine.
job sites. They have things to
Exactly.
do, man.
Here's one tip. Utilize limit orders, buy limit orders. I don't know if you know what those types of trades are, but what you can do is you could put in a trade. So let's talk about like American Express. I could go and log into my website and I could say, so American Express is trading at 142 right now, 142.87. So I could put in I could put in a trade to buy American Express at $140 a share if it gets there, and I could put it at a good till canceled. It's a good until canceled order. I don't know if you ever heard of that.
It's similar to like scheduling different types of. I guess I wouldn't say.
So
I don't want
pretty
to
much
compare
all
it
it
to options, but it's a
oh
similar kind
yeah,
of.
yeah, exactly. You said, but that's though that's a very good analogy. So pretty
Options
much
is a
all
dirty word in the finance industry right now.
yeah, so essentially all it says is if American Express gets down to 140, my broker is going to execute the trade at 140 right there, and I don't
Yeah.
have to, and it's a good until canceled. They'll hold the trade on the books until I cancel it. So that's something I utilize too. Like I'll just be like, 140. And then, so I don't have to check it every single day. I just know that if it gets it down to 140, I want to be adding to my position here. So utilize good until cancel buy limit order. So you go to buy and it goes to trade type. It's going to be market, limit, and a bunch of other nonsense you don't need to be looking at. Just go to limit. And then and then it's going to give you another option and it's going to say like day or good until canceled. Do good until canceled. It's going to just stay on the books for literally, I think it's for a year. They're going to hold it on the books for you. And that's what a lot of institutions utilize too. They just good until cancel limit orders. They'll just
Yeah. Well, that's how they.
they'll
Go ahead.
throw some good until cancel limit orders, Emmett, that are like you wouldn't even think like would ever hit. Like so like if Amex is trading at 142, maybe I'll throw a good until cancel at 120. It's like damn, like that'd have to be a big sell off, but it might happen. You know what I mean? It might and look, I might just have it out there. It's like, oh, I picked up a share, and I didn't even have to like look. Maybe I was out.
Yeah.
I'm a project manager, and I was out actually doing real things. You know what I mean? Making money. I would rather, and another thing, I would rather people put more time and effort into the job that they're actually doing than putting time and effort into investing because you're actually going to make more money advancing your career, right? In the long term, I
Yeah.
would
It's the
rather you,
easiest way to
I
maximize.
would rather you do a good job at what you do. Let's say you make 80 grand this year and you do a really good job and your boss gives you a $20,000 raise. That's a lot better than having to buy and sell securities trying to make, let's say you make $500. I mean, but then you don't get a salary raise. You know what I mean? So it's like,
Exactly.
what the hell is the trade off there? So again, kind of back to like invest in yourself a little bit. You know what I mean? I'm like super into investing, but there's like a balance. Like, you can't just because too many people like super obsessive about like investing and like they forget that they actually have a fucking real job. Yeah.
There's tons of people who are like who text me during the day and they're like, did you see like markets going here or like this company's at this? And I was like, I'll check it and I'll be like what are you doing looking at this right now?
Yeah, exactly. Like what do you like? But for me, I have the advantage because I'm just like, like I sit at a desk You know what I mean?
Yeah,
So
like our jobs aren't life or death. We're in front of a computer, and then we're able to look at these types of things.
exactly. But I think for people, that are, out, maybe you're a frontline worker doing something, um, just know that you don't have to, because there's like this notion, man, of like, if for me to be a good investor, I have to be in tune every single day. It's just, no, you don't, dude. You just really don't. In fact, you probably will do better just not knowing what happens on a day-to-day basis, to be completely
Exactly.
honest. Like,
Keep your hands
uh,
off. Let it do
yeah,
its thing.
put it in the drawer. So yes, how often should you be buying and selling stocks? Depends on your personal situation. Um, Ideally, not often at all. Just buy the position, put it in a drawer. You know what I mean? Check it, every month or whatever. I mean, if that's what you want to do. For me, I look day to day. I like looking to add, but look, I can't expect people um to do what I do. Again, we all have our own sort of lives and sort of situations and things. Um, there's a lot of things that are a lot more important than buying and selling stocks. Trust me, people. There's a lot of
Exactly.
there's much more to life than doing that. And just be consistent, man. You don't need to absolutely love and be obsessive about investing for 2 weeks and then absolutely forget about it for like another 2 weeks. Like, because you just get burnt out. I've seen so many people that have already gotten burnt out from investing. It's just like, dude, how do you get burnt out? Like, you're like 24 years old. Just like stick with it.
Yeah. It's a
Like, what
tough
the
thing to like you said, like once you get so focused and keen on something, there's some people that are really love it and are into it for a long time, and then some people that just they get kicked once when they're down, and then the stock market doesn't work for me. I'm out of here.
Exactly. Yeah, it does. Yeah, it doesn't work for you. Like, it's the stock market's fault. That's
It's
like the
not for
bad. It's
me.
just,
It
it's
doesn't
just
work.
like, dude, like, I mean, if it's not for you, I get it. But then I would suggest, I mean, we go off topic. I mean, man, with this cash environment, you know, I mean, where are you going to put your cash? So, I mean, if the stock market's not for you, man, you better be a real estate investor, or you better be investing in other things, because the last thing I would want is just for people to be sitting on a lot of cash right now. With
Exactly.
what
We
the government has, back in 2009 when our government bailed out the banks, uh, our government, the U.S. government declared World War III against our own currency, against the U.S. dollar.
exactly.
Right? We're currently at war against our own currency. So if the stock
And
market isn't for
next,
you, you better find some other things.
there's safe havens out there, but we will touch on those next week. Next episode we'll go over a little bit of inflation, how to
Yes.
hedge, and then we'll get into some of the big real estate numbers that came out with that, as well as other alternative kind of places to put your money.
Yep.
But
That
again,
sounds exciting. Yeah.
Jamie, any final goodbyes?
I think this is a really good episode. It was more succinct, and I think a lot of the points that we went over were good. I hope it was as exciting. I wasn't making the the huge calls again. You
No hero
know,
calls this
yeah,
week, but just
no hero
good
calls, but
fundamentals for the people out there.
exactly, man. I think what people were kind of looking at was maybe taking a step back, and I went over kind of some last week. I went over kind of some higher level, like micro things to do, but then kind of didn't realize that, hey, you need your foundation, right? And I
Yeah.
kind of assume that everyone has their foundation, but in reality, I mean, even I need to work on my own foundation, right? So does owning 50 plus stocks really work for me? I've owned more, Emmett, like a couple months ago. I owned like 68, and I realized, I'm like, dude, what the hell am I doing? No, honestly. And so, like, I'm not perfect. That's another thing. Like, dude, like, I trimmed it down where I'm like, dude, what the, like, I looked at some name, I'm like, what the hell am I doing owning this? Like, seriously, like, what the fuck? Because just like anything, I got caught up a little bit in kind of the mania, and I wasn't buying like dumb shit, but I was buying stuff like smaller companies that, I mean, I normally wouldn't do. And I'm just like, man, what the hell am I doing? You know what I mean? Let me take this back, get more concentrated. So it's it's always a work in progress, man, and no one's perfect. There's no hedge fund manager or even big time investor that's perfect. So figure out what works for you and do what makes sense, man. I hope
Exactly. And
I
then
hope
week to
I
week
yeah.
we'll be kind of touching in and then toning down on what we're talking about here, and then we'll be putting things a little more segmented and working that out. But as long as it's going to be fun for you guys that are listening.
Yeah. I appreciate you having me again. And if anyone has any more questions about what we talked about or any topic, any additional talking points, please let us know. We got a lot of questions from the last episode, and it allowed us to talk through things. These are all questions that all of you asked us, right? These were not talking points that we created. So please continue to be curious, continue to pick our brains. Um, so that we can, continue to tailor content to what you all want to hear.
Yeah, and that's awesome. The podcast has been well received by a lot of people, which is great for early on. It's episode 5, so
Yeah.
with this many questions,
Yeah,
we're
exactly.
we're
Keep
making
asking,
strides here,
people.
people.
Keep
Keep
asking.
asking. All
I
right, Jamie
appreciate it,
Bell.
Emmett. Yeah.
As always, a pleasure. I'll talk to you
Yeah,
soon
dude.
here.
You have a
This has
good
been
one,
Outside the
man.
Lines, episode 5. See you guys.
Absolutely. See you, man.